This is total growth investing, where price growth is not enough. Dividend growth is not enough. We want to find stocks that grow in both of these categories. And if we can find them, we can beat the market. This series of videos will be doing a basic review of the top stocks on my total growth investing ranked watch list. I have 673 stocks on that list, and I want to focus on the top 10. Everybody does stock analysis a little bit differently. Here's how I do it and what I look at. I look at first impressions. I look at the stock price. I check whether the company is a household name, and if so, where and for what purpose. I look at market capitalization. How big are they? How big in their market are they? I look at what sector and industry they're in. And then I do a basic surface analysis. I look at price growth, dividend growth, dividend history over time, dividend yield and how it has changed, yield on cost, and total return. I can also do a deeper analysis. Earnings per share, adjusted earnings per share, operating cash flow, debt loads. I'll look at the revenue and margin. I'll check fair value based on these measurements. And then I'll look at estimates over the next couple years. Let's look at Applied Materials, one of the giants of the information technology age. First impressions, their stock price is $55.69. Their IPO was in 1972, initially selling at $10 per share. Given the stock splits between 1972 and today, that $10 is worth about 7 cents. That's how far they've grown. Are they a household name? Well, if you live or work in Silicon Valley, the answer is yes. They were founded in 1967, and they're focused on semiconductor manufacturing equipment. Not the semiconductors themselves, that's Intel and AMD and a number of others. They're working on the equipment that makes the semiconductors. If you own a computer, a cell phone, anything with a silicon chip, you probably have AMAT to thank for many of the components in that device. Their customers are an incredibly long list, starting with Apple, and it just goes on. I could name big company after big company here. Here's Boeing, DuPont, Dell, Honeywell, all of the big names that you've probably heard of, 3M. Let me just scroll down the list so you can see how long it is. These are the companies that buy equipment from Applied Materials so that they can manufacture what they sell to customers. There's Texas Instruments, the very first stock that I bought. Their market cap is $51 billion. Sector, information technology, and industry, semiconductor equipment. How has their price grown? Well, this is just over the last 10 years. They had a big leap forward towards 2018. They pulled back a little bit, rose back up to an all-time high. Here's the crash for the COVID-19, and they've almost recovered. How about dividend history? Well, they started paying in 2005. They increased for a while. They've had a plateau, but then suddenly increased it. And it's more than made up for that. Their last one was will be paid on June 11th, 2020. Their ex-div date was May 20th. This announcement was made in March. I'm expecting the next one soon, because this was 3 months ago. Their dividend yield? Well, Seeking Alpha is where I got this, and the data from this point forward is a little sketchy, but you can see it's just around 2%. It's between 1 and 3% going back 10 years. Let's take a look a little bit deeper. Their payout ratio is 23.12. That gives them plenty of time, plenty of space to grow. Their 5-year growth rate is 15.72%. Let's look at it all. 1, 3, 5, and 10 years. Their 3 growth rate, that's that big surge that we saw. Their actual dividend history, here we go again. You can see all the individuals, and it's pretty steady. Steady growth. How about yield on cost? Well, if you go back 5 years, 4.32%. How about 10? That's nice, 6.85. How about 20? They had trouble during the dot-com boom. Okay? But let's go to all. Look at that. So this was in the 1990s, the early 90s, early adopters of technology. Remember, 1972 is when their IPO was, so this doesn't even go back that far. If you had purchased the stock on January 3rd, 1990, you'd be getting 197.62%. So let's say you put 10,000 into it. That means you'd be getting 19,762 out of this stock every single year. That's not bad. Their total return has pretty much matched their price, but let's go back to Seeking Alpha and go to Momentum and see how their dividend has affected that. Down at the bottom here, here's 5 years, here's 10, and here's the max. It's almost a 3,000% increase. Going back to 1990, of course. Anybody got a time machine? Let's go a little deeper. Let's bring up dividendstocks.cash. And let's bring up AMAT. Okay. Technology, semiconductor equipment. Their dividend stability is 0.94 out of 1. It's a ratio. Earning stability, 0.73. Nice and high. Cash flow stability, 0.78. Revenue stability, 0.81. With that list of customers, I'm not surprised. Price change, just price, over the last 10 years, 334.16, 15 years, 230. Let's look a little deeper. Fair value calculations. I'm going to take away everything but stock price to start with. So here's their stock price over the last 20 years, but let's just look at 10. Here's earnings per share. Pretty much followed. Here's their fair value based on earnings per share. Based on this, they're a little undervalued. Adjusted takes into account litigations and one-time costs. This shows that they've made a little more money. How about operating cash flow? A little better yet. And the estimates are that they're going to be doing really well. Let's bring in those lines. Brown is based on adjusted, and the yellow, or the amber color, is based on cash flow. So according to this, If we bought it right now, and at the end of 2022, it matched the fair value, what would we have? Well, if we put $1,000 into it, we would have a capital gains of $520.16 with paid dividends of $39.08. That's not bad. What if it went even further? If we bought it here and sold it here, fair value based on earnings per share, price per earnings ratio, that's even better. If we put 1,000 into it, our capital gains would be over 1,000. That's a nice jump. But otherwise, regardless, I think the operating cash flow and all of the other estimates are showing that this stock is likely to go up. Is it undervalued right now? No. It's about equal. But they're going to do great business over the next couple of years. Thank you for watching. If you liked this video, please click the like button and subscribe to the channel. I'll be doing more reviews like this of my top-ranked total growth stocks over the next few weeks. And I also have some guests planned with other ideas that you can use to beat the market over the long term.